Hello and welcome to the Wendell Effect for the week of November 6th for India. This is Brandon Wendell with you today, and just a reminder, we are not registered broker-dealers or investment advisors. We're taking a look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities or giving any personalized recommendations. There's always risk of loss in the markets. That's always the case. No matter what we do, we can't eliminate the risk. We can just try to minimize and manage the risk. And we are not subject to trading restrictions, so we can have a position of security and initiate one at any time. So, let's see. If you want to stay in touch with me, please send me an email. Love to stay in touch with everybody and see what you're interested in the markets. And if you got any personalized requests for things you'd like me to look at, let me know as well. You can hit me up at brandonwendell.cmt@gmail.com. You can also catch me at TraderBdub on Twitter. And, of course, find us on YouTube for the Wendell Effect. Well, starting off for the week of November 13th for India, take a look at the overall market, and you can see that this week was relatively strong. We had a couple mixed, Hindustan, Unilever, Maruti, Titan, they were a little bit down, but for the most part, some of the big names like Reliance, TCS, Infosys, HCL Tech, Wipro, and HDFC Bank were also very bullish, and that's what drove the market to the upside this week. You can see that we finished off with a weekly bullish candle, breaking some new highs that we haven't seen at all this year. So we actually had the highest close so far on the Nifty for 2022. So very, very bullish here. And we still haven't reached our targets yet. You know, if you're looking at the overall move from the May till, I think it was October rally of last year, when we retraced, we almost have made it, well, we have made it past the 61.8% extension. And we actually have two overlays here. You see this correlation between the next projection at 19,636, and then when you just take this year's rally, pullback, and projection, it lines up pretty much in the same area. So we do have one target here, possibly at 18,483, that could stall price out a little bit, but ultimately it looks like we're heading up towards that 19,500 with that overlap if we stay bullish. The momentum is still very strong, so it could continue to go higher. Looking at the daily chart, we took a little breather. You see the negative divergence that led to this little pullback. We have now moved to a new high. As you saw, we got basically on Friday that big gap up and the close at an all-time high for the Nifty, and unfortunately we don't have more momentum. So you got to wonder if this is going to stall and pull back a little bit before we can go higher and reach those targets. And that's kind of what I'm seeing right now. We didn't get enough momentum to really continue to go higher, so look for a possible little pullback, some profit taking before we continue to move upwards. Dropping down to the 4-hour time frame, pretty much see the same thing. You know, we see the divergence, we got the pullback, then we gapped up and tried to run higher, but we're doing it on less momentum, which is not sustainable. So that's suggesting that we may get a pullback. It could go all the way back down to 18,000 before we go higher. So just expect that. If you haven't bought in, don't chase price. Wait for that pullback to get you a better opportunity to buy in at a lower price. Well, taking a look at Reliance, you can see that we actually hit our first target here. Actually, I guess it would be second target, really. But what we did is we duplicated the preceding impulse after a correction. On Friday, of course, things were very bullish, so we broke up to a new high, at least for the month, or, well, past 2 months, really. And it looks like we're well on our way to our next target of 2730 on Reliance, but because we moved up and we're not getting more momentum, we might get a little bit of a pullback this week before we go higher. So where Reliance goes, so goes the Nifty, so keep an eye out on that. You know, according to the historical movements of Reliance, from the 13th of November till the 28th of November, 80% of the time over the last 10 years, we've moved up almost a little under 2%. So this is showing that, yeah, while we might have a little pullback initially, eventually Reliance will end up moving higher, most likely, and getting up towards those targets. And again, that'll drive the Nifty higher as well. On Infosys, one of the other things that's kind of fueling the market, well, that looks like it might take a break. As you can see, historically, for the last 15 years, now it's been about, 67% of the time we went down. We only went up 33.33% of the time. So the average return for that period of time for the next 7 days is actually a negative 3.08%. So that's going to weigh on the Nifty, and that might lead the move to the downside, that correction that I said we should be expecting. Looking at the chart, you can see that we are back up pretty close to the prior highs we had at the beginning of November, but we're really weak on that momentum. For us to break and continue to move up, we really need to see more momentum, not less. And when you look at the RSI down below, you see that we are possibly going to have a divergence as we're trying to break out without making more momentum. So I expect a little pullback, possibly down to this 1525 area. It may not close the gap fully, but at least till about that point. And then you look on the intraday charts to see if there's a buying opportunity when you get down there. Also look to see if the momentum starts to shift back to bullish. But we will eventually break out to get to 1620. It's just going to take a little pullback first. HDFC Bank, also very bullish, as you can see last week. Closed with its nice gap and go. Again, we might get a bit of a pullback, but the momentum here on HDFC Bank actually is extremely strong. So really not going to get the pullback on the Nifty from this market, or from this security. It'll be from Reliance, most likely, and possibly Infosys. Another stock we were looking at was Bajaj Financial Services, and you can see that it pulled back into an area of demand. It's a 50% retracement. Actually, technically, we went all the way to 61.8% on the way back, but it looks like we're getting ready to bounce. The momentum indicator, RSI, did not go into bearish territory, basically hung out above 50, which is pretty bullish. So it looks like this week, if you see we get above this candle, that's actually a bullish harami then, where you have the mother candle and then the small baby candle inside. And in Japanese, that word harami actually means pregnant. So that's what we have, is the baby inside the body of the mother here. It's not what it means in Hindi. I know what it means, so don't worry. Anyway, if we get a breakout above the high of that candle, we should be able to resume or move back up. Again, as we come to the previous high, make sure we have more momentum. If we have less, then we'll fail at that high and pull back a little bit. Looking at the Nifty, the Bank Nifty, or Nifty Bank, whatever you want to call it, you can see we broke into a new high, and same problem with momentum. We didn't really have a lot more momentum, although there is a little bit more. So this is more of a sustainable rally than what we saw in the Nifty, and we might not really get much of a pullback here. It looks like we could continue to go higher, and our first target is 43,288 on the Nifty, and then our second target would be 46,935, basically 47,000. But this is looking pretty strong. There's no reason for it to pull back on the weekly chart. Dropping down to the daily chart, we're seeing the same thing. We're breaking out of a little bit of sideways momentum that we had for the past couple weeks, and we have more momentum as we're doing it. So this is looking pretty good that it's going to continue to move up. On the 4-hour time frame, you see we do have a little divergence. So this is the first sign of weakness that we finally see. And with that sign, we're probably just going to get a correction, a pullback. So that's why I put up the fibs. You can see at the 50%, that's really where you have drop base and rally demand. So we may end up going that deep. Although because the trend on the weekly and daily is strong, we might only pull back to 23.6 or 38.2. So I'm expecting a little bit of a pullback on the Bank Nifty, but just not a really big one, that's all. So just keep an eye out for that. A couple new trade ideas. As we take a look at the markets, we have Tata Consultancy Services, or TCS. 73% of the time from the 14th of November to December 1st, it is bullish with an average return a little over, so I guess a little under 1.75%, the average return. So we should look for a possible pullback and a buying opportunity for a breakout. Looking at TCS, we are pushing up against a supply and we don't have momentum to break through. We lost a little momentum, so I'm expecting a pullback, but this would be your buy opportunity. Right around 32.20.90 to 31.92.65, you place your stop, maybe at 31.90. Give it a little bit of room, but not too much. And then our targets as we break out would be 34.77 and then 36.36. So keep an eye on TCS. Also, when we do come back to demand, make sure the RSI does not go below 40, so that way we're still pretty bullish. Anyway, that's what I got for this week. If you got any questions, go ahead and again shoot me an email, and you got requests, you can send them there as well. Until next time, trade safe, trade well, and take care, everybody.